Welcome to the Mason & Associates Financial Planning YouTube channel. I'm Tommy Blackburn, CFP, CPA. Today, as we're approaching the end of the year, hopefully this will be out by the end of the year, we want to talk about RMDs, which can, on the surface, be a rather dry subject, but RMDs are required minimum distributions. So once we get to that age, which used to be 70 and a half and now could be 72 or 73, we have to begin taking distributions from our IRAs or TSPs or 401k if we also have a private sector plan. So we have to take these. If we don't, we'll get penalized. These are taxable distributions. The message we want to deliver today is when you have to start doing these required minimum distributions, it has to be the first thing that comes out. Also, be aware that if you have a TSP RMD, taking money from it does not satisfy your IRA RMDs or vice versa. So all of your IRAs can be aggregated. So if you have 100,000 IRA and another 100,000 IRA, and let's say you have a $2,000 or a $4,000 RMD, when you combine those IRAs, that's fine to take that from one IRA. However, you can't go to your TSP, take 4,000 and say that satisfied my IRAs. They do not aggregate. So keep that in mind. And also, while it sounds so simple, the first distributions, the RMD has to be the first thing that's satisfied. So where we see you can make a mistake is if you decide I'm going to do a Roth conversion this year, but you haven't satisfied that RMD. Well, guess what? That Roth conversion, it wasn't eligible because it was actually a required distribution. It was not eligible to be converted. So the proper order, satisfy the RMD, then do your Roth conversion. Also keep this in mind with those QCDs, those qualified charitable distributions, which we talked about in a previous video, those satisfy the RMD. So just be thinking about your order of distributions here as you're doing this. Obviously, we've got some videos out there about seed versus sod and just hiring a professional. If it seems like a lot, reach out, let us know, or another qualified advisor. We can certainly be of help. And it is important as we approach the end of the year. This is one of those checkbox items. We want to make sure we satisfy those RMDs, and we want to make sure we do it in the proper method. Let's also not forget about you can use this to correct withholding. So if it looks like we're going to owe, use that RMD to get us paid in so that we don't have any penalties when we file our tax return. I mentioned there are some penalties when you don't take an RMD. That's another one that's a little complicated right now with the way tax laws have changed. It used to be a 50% penalty. It's going down to 25%. And I think if you can show there's a reasonable cause, down to 10. This all sounds complicated. Again, I think that's another reason why you should have a qualified advisor in your life, in your corner. If you like what you're hearing, please hit the bell, reach out, send us an email. We'd love to answer some questions, as well as hear from you. Have a one-on-one conversation if you're interested. Thank you, and until next time.